We have a meeting. The Senate is recovering now on the fiscal cliff, and it is New Year's Day, and here we go.
Mr. President, I understand we're in morning business.
The senator is correct.
But, Mr. President, I
give you a little window into the proceedings on the Senate floor. By the way, Majority Leader Reid just said negotiations are continuing as we speak. We just missed his comments, and you saw Patrick Leahy speaking in the meantime on the floor as well. John Harwood's live in Washington with the latest. John, what might we expect at least over the next hour or two?
Well, I wasn't able to hear what Harry Reid just said because we were on the air and I had the IFB in my ear. So I don't know exactly any other timetable he gave, but what I mentioned, as you and I talked a few minutes ago, was that a Republican source was telling me, expect the negotiations to keep going, that we weren't going to get a deal immediately, that things have to be scored and prepared, and then members have to get briefed. So we're going to go deeper into the day in terms of this process and when any potential votes might happen. But I would expect that if Biden and McConnell spoke at 6:30 this morning, their staffs are probably buttoning up the results of that phone call. There may be more phone calls. And then when they have got a deal, when they've got it scored and agreed upon, they will come out and we'll all know it pretty quickly, but not just yet, Carl.
John Reuters saying, Reid says fiscal cliff negotiations continue, differences remain. Some commentary that McConnell's not on the floor. A good sign? He's too busy working things out in the back room somewhere?
I would think that that's a good sign. If you're not going to have a deal and negotiations are going on, Mitch McConnell is a key player in those negotiations. I think some of the things that are still in play are exactly what the tax threshold level is. We've talked about 400, which was the president's last offer to Boehner. We've talked about 450. We've talked about 500. All of those are possibilities, and there's an interplay between those levels and things like the what happens on the estate tax, what happens on the sequester. Do they come up with 2 months of cut? Do they come up with 3 months of cuts to try to satisfy those who say, well, we may not want the across-the-board budget cuts that are called for under current law, but we want some cuts if we're going to agree to tax increases. That's a key Republican demand. So all of those things are in play. Each movement in any one part affects the others, and we're just going to have to see where that comes out, including capital gains and dividends, which I've been assuming would go to 20% for both cap gains and dividends. That's down from 39.6%. Which is where they would go under current law if we go over the cliff, but it's up from 15 in both areas from where we are right now.
Right. Last question, John, and I'll make this quick. If we're talking about things like cap gains, and I know it's a big if, and the sequester, does that mean we have moved past the biggest elephant in the room, that being income levels at which taxes increase?
I don't think we've moved past it because until they announce what a level is and until the other parts of the puzzle get settled, we can't know that for sure. And the other thing we can't know for sure is how many Republicans are going to vote with the Democrats, both in the Senate and in the House, and will John Boehner put it on the floor? My guess is he will, but we'll see when it happens.
John, appreciate you staying close to us. John Harwood in Washington. We'll come back to you in a couple minutes, and we'll wrap things up with Andrew Root.
Okay, basically, while we have the live video, I've had the Apple chart playing in the background, and it's January 31, and it's 8:08, and you just got to hear a little bit more about the volatility of the government there. And the reason why we're telling people that is, listen, buying into this thing as they rally up, it's the last calendar day of 2012, my friends, and rallies will be sold going into next year, as they have been for the last several months. That means that great days like today on the upside here that people are chasing, and it's called portfolio dressing, and there's been lots of comments out again that it's very cheap and it's this, it's that. It's all price volatility. Let the public analysis be their public way, and let us deal with buying the 525 puts that are down here. 850, 845 right now. That's a 525. They were $19 on the high. But listen, it is the last day, and people will buy, and it's called portfolio dressing, window dressing. Those are some of the terminology names. There is a high algorithmic trading system that is used in high frequency to run these to $18 ranges. It runs up to the upside, and you've seen days where they go $25 the opposite way on the downside. But people are buying to put it in their portfolio because it's the last calendar day of the month and they own it at much higher levels. It drops the cost, then they mail their statements out. So when the people open them up, they don't look as bad as they normally would. And that's part of what today's movement is. And it's on the last day of the month going into calendar 2013. So people that believe there's nothing wrong with buying something. Look at they report earnings January 22nd of 2013. Apple will have up days and it will have big down days. The upper end of the resistance levels will remain a challenge for the name moving forward. So we would be looking at the daily simple moving averages on Apple. And once again, I've already brought you the statements about the fiscal cliff. This is just a second part of this analysis that we're doing so that you can see how the volatility trades with government intervention and how the last day of the calendar year is it's getting an update. But what happens after today? And what happens when we start 2013? So every time it's been a good thing to sell into the resistance in the upper end of the volatility on Apple. So really it's fiscal cliff versus Apple in this video and how it trades and how you can see intraday volatility ranges 598 highs and 42 lows. And we have been open right now 1 hour and 30 minutes. Plus, you can add 11 minutes on this new half an hour bar that will be starting. And you can see that price exhaustion starts to hold 598 highs. Very seldom do we see this lately, but because it is the last day and everybody wants to be optimistic as they always are, you're going to get a lot of ranges and a lot of people chasing the name. But you got to know when to sell, because if you don't know when to sell, none of this move was going to do you any good anyway. And once again, fiscal cliff versus Apple intraday live, and we've got calls that are going up in value and we got puts that are coming down in value. When we hit the wall of resistance, there's a 525 put. Let us not forget that the 530 put is a weekly. Both are weeklies. They were 22.55 on the high today and 23.15. And when they get marked down real low here, depending on wherever the resistance is we're going to look at wholesale bids in these contracts. Because every time that we go up to major upper levels means upper price levels, equal upper higher high resistance levels. And right now, this one only has 200 pennies. That's $2 pullback from the intraday high. When volatility is in play, as we all know, from many of our own live trades and everything that we do, is that you get $5 pullback off of the highs. They bounce, but you get $10 reversals when this thing is ready to do its thing again. We're going to have a lot of volatility today. And a lot of stuff is coming out of the government. It's on this video. So it's fiscal cliff versus Apple. It's portfolio dressing. It's how you can buy it, but you need to be selling into the upper resistance levels. It is going to be extremely volatile in 2013 and in the month of January. We know that every time it comes up off of the lows, we've traded it many times off of the lows, but what do we always have to look at is where the resistance is going to be. Because once the resistance is there, then the short comes into play, and that's how you buy 525 puts wholesale. They were $19.10 on the high. The 530 was 22.55. They closed at 23. Look at them. The low was 10.50 here. We're printing 11.05 by 11.25 right now. And this is a very, very strong name on the last calendar day of the year. Fiscal cliff versus Apple. And what they're doing is, regardless of the fiscal cliff, people are jumping in. And there is a high frequency program that buys the ask to run it to these highs. That's a different way of learning high frequency and what it means in these movements intraday. But there will be an upper end of the resistance level. We will be paying close attention to how strong the intraday range is here. We're at 2.77 deltas in our system. That's 44.35 teenies, which equal 40 cents a line. That's $17.63 movement on the high here. And you can see we're at 2.55. Now, when this goes down in value, then the dollar value, this would come down. But every so far, what has been happening intraday is the short sellers that are short and it goes up higher in price when it pulls back, they come over here and buy the cover. And that's another way of getting these intraday morning higher highs when the shorts have to scramble out. They buy the pullbacks, and that's why you pop until the shorts are all out of the name and the top end of the resistance. It's got to be $5 off the high, and the reversals have to come in at lower highs, like at the intraday process, and 200 pennies, which equals $2 reversal off of here. Bid and ask right now is 22 by 45, 31. What we look for is where the bid crosses in front of the ask and they sell below the market. That's when the red bars will go down. But how do you verify it in our platform? This will go lower. 248 will go down to 2.00. Only two deltas up. Right now, it's very strong right here, and it's at 39 teenies plus at $15.69 and 75 cents. You can see how sporadic the high frequency computing models that do the buy and sells are doing in here. And what we look for is where they cross the bid. But remember, at the pullback has to be $5, and once it bounces up $2, then it makes lower lows on the day and works its way right back down. And we can see that the IR has to go below 85. You can see here live, and remember, everything we do is live. That's 2.43. It's very erratic. This has got to go down in value. Every time that this goes up like the 2.5, that means that people are buying the cover and they go over here and they buy the ask in the print. That's what it means. You can see it right here. 61 cents, he buys it, but 53 steps in, 37 is there. But here's the key. The only way that you know when that reversal is going to happen, and you can see our TR, that's our proprietary indicator. It doesn't lag price right here. And it's go up and down and up and down and up and down and up and down, and you can see the diamonds going higher. Okay? And you can see that this is elevated at 2.49. It's got to go lower. When that goes lower in value, this comes down in value. Does not lag price. Once again, Fiscal Cliff versus intraday Apple trade.